Hi, everyone. Welcome back to NNIKA'S Journey to Financial Freedom. Coming to you guys today with another awesome video. This one is going to be focusing on how you can get into a home, 1 to 4 units, with little to no money out of your pocket and even possibly get money back at the closing table. So if you're interested in learning how you can do that, then stay tuned, because I am spilling the tea.
Be strong.
All right. Welcome back, everyone. So, as some of you guys may or may not know, that I used to be the state of Nevada's program loan officer for down payment assistance and the mortgage tax credit program. I did that position for over 4 years, where I did a lot of training for home buyer education, as well as educating local lenders and their loan officers. And also, I conducted a class for realtors to get continuing education credit, and I educated them on the various down payment assistance programs that the state of Nevada had to offer, as well as issued them continuing educational credit certificates. So if you want to know more about how you can get into a home for little to no money down, then you definitely want to listen up and take notes. Get out your notepads, okay? Now, a lot of people think that these programs are only for if you first-time home buyers. That is simply not the case, okay? You don't have to be a first-time home buyer to be able to take advantage of these programs. And although I did those programs when I was in the state of Nevada, other states across the country have very similar, if not the same exact programs. I'm currently living in the state of Louisiana, and in the state of Louisiana, they have the same exact programs that the state of Nevada had, plus they have some additional ones that the state of Nevada did not have. So, and in Louisiana, you would go through the Louisiana Housing Corporation. Just an FYI for my listeners who reside in the state of Louisiana. For the state of Nevada, you're going to go through the Department of Business and Industries, the Housing Division. Okay, so you would go to the website for Nevada is homeispossible.org, I believe. It's been a few years since I worked there, but if you just Google Home is Possible down payment assistance program for Nevada, you'll get their website. It'll pop up. Okay, and if you do decide, if you are living in Nevada and you decide to pursue the program, you can ask for Josie Hatem. She's the one of the program officers there. She's an awesome lady, because I trained her. All right. So, anyways, so that's a little bit about my background in terms of my experience in my former life. Even prior to that, I was a mortgage banker. I did over millions and millions of dollars in home loans. I currently am a commercial loan specialist for the United States government. So now I work on a lot of commercial projects, water projects, sewer projects, community facilities, things of that nature. But residential financing is that's still my heart, still my pride and joy. Nothing feels better than helping somebody realize their dreams of purchasing a home. And the awesome thing, and it amazes me with all of the marketing that we did when I was in Nevada, the number of people who still, even to this day, don't know anything about those programs. It used to just blow my mind when people would call or I would run into people when I lived in Las Vegas, and I would mention to them, about the down payment programs that were available, and they would not even have a clue, never even heard of them. And it's kind of sad, even though we did a ton of marketing, with social media and videos. I even did a couple of, I did an interview, a TV interview when I used to work there. I did a couple of radio interviews. I did a home expos, where we had a booth and table, and still people didn't know about the programs. So, a lot of times some of the money goes unused because people just don't know about the programs. So that's why I want to get the word out, so that if you do want to be able to buy a home, and you can actually buy up to a 4-unit complex, which is what, if you're in an area that have a lot of those types of properties, I would highly recommend that you go that route, because then that way you're basically getting your place for free, every month, because your tenants in the other units will be basically making the mortgage payment for you. Okay, so if you got a duplex, for instance, then you stay in on one side, and then you rent out the other side, or a triplex or a fourplex. Okay, so that's what I would recommend that you do. Of course, you can always, look into your standard single family residential home, But anyways, okay, so in order to take advantage of these programs, particularly the down payment assistance type of programs, there's a few criterias that you have to be able to meet. One is you need to have a minimum or a middle credit score of 640. That's pretty standard with most of the programs across the board, no matter where you live, whether it's Louisiana, Nevada, or in any other state. It's going to be a 640, which is not hard to get at all. If you're already at a 600, it's not that hard to get up to a 640 to get your credit score up 40 points. Basically, if you got anything derogatory on there, you're going to want to try to get those things removed. You're going to want to start paying on time. You're going to want to pay down your revolving credit lines. And then once you get those paid down to under 30% usage, a lot of times the credit card companies, they'll automatically raise your credit limit, which is going to help you tremendously, because that's going to make it so that you have even more credit available to you, but you're not using hardly any of it. Okay. So if you can't necessarily pay them down under 30%, then see if you can get your credit card companies to raise your limits. So then that way, that'll help get your usage percentage down. Okay, just a couple little tricks that I've actually done myself, or I've recommended to clients, and they've done. And these are things you can do yourself. You don't necessarily need to pay somebody to do these things. Okay. And then, so that's one of the first things, is a 640 credit score. Okay. Typically, most of the programs, they have income limitations. So for the most part, a lot of programs, you cannot earn more than around $98,000, $99,000 a year. Okay. If it's going to be an FHA loan, then they're going to look at your whole entire household income. Okay. So you and a spouse, or whoever is going to be living in the house that's 18 years or older. If it's going to be a Fannie Mae loan, conventional, they call it conventional, then they'll only look at just the person that's borrowing income. Okay. The other thing is, most of the programs have housing limitation, purchase price limits. Okay. So I believe it's probably around 400,000, and maybe in your higher price states that limitation is probably higher. But in Nevada, I know it used to be around 400,000 was like the maximum purchase price. They may have gone up on that now, because it's been a couple of years since when I worked there. But you could still get a pretty nice house for 400,000. Okay. but unless you're gonna put significant money down, then you might not want to go that high, because then your mortgage payment is going to be pretty high. Just, keep that in mind in the back of your head. The other thing is, in addition to income limits, credit score, purchase price, if you had a bankruptcy, okay? So these are bankruptcy issues, are not so much the down payment program requirement. It's going to be the lender and the loan type. So if it's, FHA versus Fannie Mae. So FHA, they have their requirements. If you had a Chapter 7 where they wipe out everything, versus a Chapter 13 where you do a consolidation plan. Anywhere from requiring that you be out of bankruptcy about 18 months to around 24 months or so, something like that. The first thing you want to do before you even go out and start looking at properties, okay, because this is a big mistake that people will typically make, and it used to just drive me crazy when I was the program officer, is that they would go out looking before they got pre-approved. It doesn't make any sense, because you're just gonna, if you do that, you're gonna go and then you're gonna fall in love with the property, and then try to get pre-approved, and then maybe you don't get pre-approved at all, or maybe you don't get pre-approved for enough, and then you're just going to be disappointed. So rather than put yourself through that aggravation, contact a lender first. Now, not every lender is approved to be able to offer these programs. So what you want to do is, if you know where to go in your state to find out which lenders are approved, do that. If you don't know where to go, then you see down there on the bottom of the screen where it says check out downpaymentresource.com. Go there. That website lists pretty much every state's down payment program assistance department on that website. Okay. So if you don't know where to go, like with the state of Nevada, is home as possible nv.org, I believe, or the housing division. If you're not in Nevada, then you want to definitely go to downpaymentresource.com to find out exactly where who to contact. And I just noticed that I got a little typo there on my downpaymentresource.com link. It should be an S in there, not an A. So I'll have to fix that. But anyways, go to the downpaymentresource.com website. And on that website, they're going to list the different by state, and they'll have a link in there to the appropriate housing finance agency that administers down payment programs in your area. And then those agencies are going to have on their website all of the lenders that they've approved to participate in their program. That's something else that I used to do too, is market to the various lenders and then get them the documents that they needed to sign in order to get approved for the programs in Nevada. Okay. So you want to start there, work with the lender that's been approved to offer the programs, because not every lender is, and then call them up, submit to them everything you need to submit to them that they ask you for, and try to do that all in one swoop, because nothing could be more frustrating for a loan officer is when a potential borrower starts to want to piece part information. It's just going to drag things out for you, and you're going to get very, very frustrated as a future homeowner when you do that. So get all your stuff together, your 30 to 60 days worth of pay stubs, 30 to 60 days worth of bank statements, your W-2s or 1099s, and your last couple of years of tax returns. Make sure your tax returns are signed. And those are kind of some of the basic things. If you know you've had some credit challenges, go ahead and write up a letter of explanation, so that way your lender doesn't have to ask you for that stuff, or you're already prepared. The easier you make it for the lender, the quicker they're going to be like, okay, boom, 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 get your application process and get you your pre-approval letter. Okay. Then once you do that, once you have your pre-approval letter in hand, then you want to either, you can ask your loan officer, or you can go back onto the Housing Finance Agency's website and see if they have a list of real estate agents who have been educated on the down payment assistance programs. The reason why you want to do that and not just necessarily some random realtor out there is because those realtors that have taken the time to attend, a class or two to learn about the different programs out there to help people get into a home, they're going to be more eager to want to work with you. Okay. And they're going to be more willing to listen to your needs and your wants and cater to you versus just some random person. Okay. So so you want to do that. And then because you're prepared, because you've already got your pre-approval letter, you can give a copy of your pre-approval letter to your realtor, and they're going to be like, okay, this person, they're serious. They're serious. They're ready to make waves. They're ready to make moves. Okay. And then once you get into contract, then your realtor will walk you through that whole process. Okay. But a lot of the down payment programs out there, you can get help with anywhere from 3 to 5% of assistance for your down payment and closing costs. You can use the money for both. And in addition to that, you can also, with some of the programs, you can layer it with another program. So maybe you get assistance through your housing finance agency, and then maybe there's a nonprofit agency in your local area that's also offering some type of assistant program, assistance either towards down payment or maybe towards assisting with repairs or something like that. Because maybe you find a house that needs a little TLC, there's assistance for that too in a lot of cases. And that's why it's also important to work with a realtor who's taken some classes to get educated in the various types of programs out there, because that person is going to know about these other programs, as well as your loan officer should also know too. But it's great to work with a realtor who has taken the time to get an understanding of all the different types of programs out there, because I'm telling you, there are tons of programs out there. And I'll tell you a little story of how I got into the house that I'm in right now in Louisiana, and actually got a check back at the closing table. So because I knew about the programs, I did my research before I relocated out here. And so I knew exactly what I was going to do before I got here. And then once I got here and I settled in and everything, I went online and was looking, to see what was out there in the market. And I ended up seeing a sign for a real estate agent. I contacted her. I let her know, what I wanted to do. And I got her, I got pre-approved, and then I got her the pre-approval letter. And, because I've bought plenty of houses over the 20 something years that I've been buying houses, I was one of the easiest clients she's ever had in her life. Her and my loan officer, they both said that at the closing. It was so funny. I said, and I asked them, I said, was I one of the easiest clients you guys have ever had? And they was like, oh my God, yes. Like, we never had to ask you 2 or 3 times for anything. You got us everything like right away. It was so smooth. And we did a 30-day closing, but we actually could have closed in 2 weeks, because my loan documents and everything was ready in 2 weeks. But the seller of the house that I ended up buying, they wasn't ready. That was the only reason why we didn't close in 2 weeks. And so But that's because I knew what I was doing, and I bought many houses before, and I got them everything they needed right off the bat. Wasn't a whole lot of going back and forth with, okay, now we need this. You didn't send us that, this, that, or the other. So it made it so smooth. It made it so easy. Um, no problems at all. It was the smoothest thing. And and I only did a $500 deposit when we wrote the offer for this house, and I actually also had my realtor negotiate a credit from the seller for closing costs of, I think, 3% or something like that. So when we went to the closing, that was a kind of a strange experience for me. And here in Louisiana, they still do things very, very old school. So literally, my loan officer from the bank was there, the sellers were there, the closing attorney, of course, my real estate agent was there, and the seller's real estate agent was there at the closing. I never experienced that before. Every house that I bought before, prior to this, it was just me, and sometimes a realtor would be there, and the title officer. That's it. So it was kind of strange, and they literally, most lenders in other states, they wire the money in. That wasn't the case here. When I tell you it's old school here, it is very old school here. So my loan officer from the bank showed up to the closing with a physical check and handed over a physical check to the closing attorney. I was like, well, that's kind of that was kind of strange. And that was the same thing when I put up my deposit, my $500 deposit. I was used to just being able to wire the money. I couldn't do that. They didn't do it that way here. I actually had to go and get a money order and then mail the money order to the seller's real estate broker. That was kind of strange for me too. But they're very much in the still doing face to face business here. That may be the case where you're at, or they may be more up to date, and you just wire everything, and it's even simpler. But but at any rate, you should have seen the look on the sellers and their real estate agents' face and the closing attorney, when the closing attorney was going through the settlement statement, and he realized that he had to, give me a check back for the $500 deposit that I had put down, because between the down payment assistance and the seller's credit that they gave me for my closing costs, I ended up getting my $500 deposit back. So I got into this house for zero money down, zero money down. Okay. And my only costs were the appraisal, which you have to get done before you can, close on the house, because the lender is going to require that, because they got to see if what you're you agree to buy the house for, is it really worth that? Okay. And then also, if it's an older house, you definitely want to get a home inspection done. Okay. And this house is very old. It's around 73, 74 years old, something like that. Totally been fixed up. It's just adorable. It's the cutest little cottage. And a lot of the major things have been replaced, like the electrical panel has been updated, and the roof was, in the last 10 years, and different things like that. But nonetheless, it is still an older house. And so I had a home inspection done, which I think that cost me around $250. And then the appraisal was like about $450. So around $700, $750, somewhere around there is what I had to come up out of my pocket for. But when I got the $500 back at the closing, I basically out of pocket about $200. It's not bad at all. Not bad at all. And you might as well pretty much say I got in with zero money down, because I really did, outside of, the things that you gotta pay for up front, which is your appraisal. And then if you opt to get a home inspection done, which I highly, 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 highly recommend that you do. So, and all of that was made possible through the down payment assistance program. Another thing, that if you have not bought a home or owned a home in the last 3 years, and your income meets a certain threshold for the mortgage tax credit certificate, you could also get that as well. And what that does is it essentially gives you around 18 to $2,000 or so on average, tax credit on your taxes. So essentially, basically, you're going to end up being able to get a better bang for your buck when it comes to writing off the interest on your taxes. Okay. So in a way, it helps to, let's say if your mortgage was going to run you about $1,000 a month, it kind of, with that mortgage tax credit, it kind of helps to lower your overall net mortgage payment by about $200 a month on average. Because you could, and you want to talk to your whoever does your taxes, but you could, in essence, increase your deductions on your check so that you bring home more, and because you're going to be getting that additional tax credit with the mortgage tax credit certificate if you qualify for that. But it's something that you would have to apply for along with the down payment assistance when you're getting the loan. Okay, you can't, if you're just now finding out about it and you already closed on your home, then you can't get the mortgage tax credit. You can't get it after the fact, after you've already bought, because those are just for first-time home buyers. And a first-time home buyers is someone who has not owned a home in the last 3 years. Okay, that's the definition of a first-time home buyer. Okay, so basically, if you want to be able to get into a house with virtually no money out of pocket, go to downpaymentresource.com, look for your state, click on for your state, and then go to your housing finance agency from there and contact the appropriate person and ask them what down payment assistance programs do they have available, and do they also offer the mortgage tax credit program. You probably will be able to see all of that on their website before you even make a phone call. Get pre-approved with one of their approved lenders. If they have a pre-approved realtor list, contact one of those real estate agents, because they're going to be more versed on the different down payment programs. And then decide, what neighborhood you want to live in, how many bedrooms, that type of thing. And then let your realtor know that that's what you're looking for. Give them a copy of your pre-approval letter, so that they know that you're serious. And when they do find you your ideal place, you can pull the trigger and put in an offer. Don't get emotionally attached to the place until you actually are getting the keys, because I could tell you some stories on how many times I put in offers for different places or whatever, and I ended up not getting it. That wasn't the case here with this last purchase that I made, but that has been the case in other situations when, the markets were really, really hot when it came to the real estate market where I was living at the time. So, and then you want to, make sure you get your pay stubs together, your bank statements together, your W-2s, your 1099s, your signed tax returns. You want to have all those things, together, ready to go, in a file, or in a file on your computer, so that you can, if your lender allows you to apply online, you can just upload all that information securely to their website, all in one swoop. You want to have all your stuff together so you're not scrounging around trying to find stuff. Okay. And it'll just make things go so much smoother for you and the realtor and your lender as well, to the more prepared you are. Also, before I forget, there is one other thing that you're going to have to do. You're going to have to take a home buyer education course. Some Most of the states and stuff offer, in-person courses, although I'm not quite sure how that's working out right now with the whole COVID thing. But and then pretty much all of them are going to offer an online course as well, which is what I would recommend you do. If especially if you've bought before, then it's super easy. But if you've never bought before and they are offering in person, then go in person, because you'll be able to, there'll be the person there that you can ask questions to, that you may think of while you're sitting in the class, or you may hear somebody else asking a question that may prompt you to be like, oh yeah, I did want to know about that. If that's not an option to be able to go in person, especially right now, given the times that we're in, then by all means, do the online one. Super easy. And then a lot of times with some of them, it'll actually, if you put in the email address of your lender or your loan officer, it will email them a copy of your certificate so that they know, okay, they've already got that done. That's something that you can do. I would recommend you do the home buyer education class before you even contact a realtor. Okay. Because if you've never bought before, especially, you do that home buyer education class, it's going to cover a lot of stuff that you didn't know. And that way, when you do contact the realtor, you're going to be that much more informed and an educated buyer. And realtors love working with educated buyers and informed, buyers. It just makes their job a lot more easier, and they're going to be more willing to go out of their way for you. Okay. Now, some of you might be thinking, well, why should I have to do all that? They work for me. They're going to be getting a commission. It's not about that they work for you or that they're going to be getting a commission, but you want to create an environment, a synergistic environment with all of the partners involved, because it's just going to make it a better, enjoyable experience for you. Because buying a house or a property can be very, very stressful, and then you throw in everything that's going on right now. Why add to your stress level and your frustration? It's just going to help you in the long run. The more you know and understand how the process works, the better off you're gonna be, and the better you're gonna enjoy the whole overall experience. Because sometimes things do pop up. Something could pop up on the title for the property that you're wanting to buy. But if you've taken the home buyer education class, then you know that, okay, sometimes those things can happen, and a lot of times, it could be an easy fix, and sometimes it might be something that you decide, what, I'm just going to stay away from that house, and I'm just going to go find something else. Okay. Let's see. Anything else? I think those are pretty much the key things. So you definitely want to make sure your credit score is at least a 640. You want to make sure that you meet the requirements in terms of, if you've had a bankruptcy, the how many years you need to be out of that bankruptcy for the different loan types, because FHA has their own requirements and Fannie Mae has their own requirements for conventional product. Also, you want to make sure that you meet the income requirements for a down payment assistance program. Right now, most of the programs, you can't make more than about 99,000 a year. You want to make sure that you meet the purchase price requirements, and you want to make sure you take the homebuyer education course. And like I said, a lot of times you can just do that right online. Some of the housing agencies have a course that they offer online through their website, making it even easier for you. A lot of the courses are offered in English and in Spanish, and probably in some of the other major languages as well. So you don't have to worry about that, if that's an issue for you. And you want to try to, you want to make sure you stay within your purchase price, range. Also, oh, I just thought of something. debt to income, or DTI for short. So basically, for most programs, your bottom ratio cannot exceed, I believe it's around 45%. So if you take all of your monthly expense debts on your credit report, just those things that report on your credit report, and also if you pay like child support, which typically is not going to report on your credit report, but for the most part, they're going to be looking at credit cards, car loans, personal loans, and if you do pay child support, and if you pay alimony or something like that. And then in addition to the housing payment itself, your future housing payment, that payment is going to include principal, interest, taxes, and insurance. So all of those things combined, you take that amount divided by your gross income. That's going to give you that bottom ratio number. That number cannot exceed, for the most part, 45%. There are some programs that'll let you push it to 50, but I wouldn't recommend it, even if they do let you do that. It's just not a good idea. Okay, because the one thing about it is that even though these programs are all fixed rate loans, and you'll hear, oh, well, your payment doesn't change because it's fixed rate loan. That's yes and no, because if the taxes change, the homeowner's insurance, the cost of that changes, as the years go on or whatever, and they do change, then that's going to change your total mortgage payment. Okay, so you don't want your budget to be so tight that your taxes go up a little bit or your homeowner's insurance goes up a little bit, and now you're struggling to pay the mortgage. This is, of course, once you're in the home. Okay, so even though you may qualify for $400,000 house, you may want to, if there's stuff available for half of that, maybe you want to focus on that. Okay, and yeah, so that's pretty much it. I think if I have said anything that has helped you, please let me know. Make sure you like, subscribe, and make a comment of how this information has helped you in any way. Or if you know someone who, is in the market or have been thinking about it, and you think that this information would be useful to them, please share this video, with all your friends and family, so that, they can realize their dreams of, owning a little piece of real estate. And I've seen some people say, well, what's the point? Because you always got to pay your taxes, even once you pay the mortgage off, why even buy at all? Well, you're going to have to pay to live somewhere. So you might as well get something of your own. And, if you get a multi-unit place, then your tenants are going to be making the mortgage payment for you. And you basically are going to be living there mortgage free. Okay. So you might as well do that. Okay. Because you got to pay to live somewhere. Nobody gets to live somewhere for free completely, unless they already own the property or whatever. Okay, so those are the reasons why you want to go ahead and get you something. And right now is no better time than any other. Even with everything that's going on in our country and in the world, people are still buying and selling real estate. Okay, and while these programs are still available, I say, why not go for it? Okay. So again, make sure you like and subscribe and share this video. Please post a comment. I want to hear back from you guys if you find this information useful, if you want me to continue to provide information like this, by all means. And I will be posting more information as it pertains to, finances and, side hustles and things like that as well. Check out some of my links down below, because I've got some great resources, for generating additional income for yourself and things like that. And definitely follow me on, my social media with my Instagram and my Facebook pages and stuff like that. And I'd love to hear from you guys. I'd love to see a picture of your future home, that you were able to get as a result of learning about this information. Okay. So I love that. That would just give me so much joy. Yeah, so, because it's no greater feeling. I'm telling you, it's absolutely no greater feeling. Oh, I just remembered something. Now, with the down payment programs, the interest rate that the lender is going to charge you is going to be a little bit above market rates, but that's okay because you're getting the money to be able to get into the home. Okay. So I forgot to mention that. And they are also limited as to how much they can charge you. Some of the programs don't allow them to charge any points. Some of the programs allow them to charge 1 point. Okay. And 1 point is equivalent to 1% of the loan amount that they get to collect as a part of providing the service to you. I just wanted to remind you of that. But they will give you a breakdown of the settlement statement. It's called a HUD 1 settlement statement, outlining what all the fees and costs are. Okay. So that's something that they're required to provide to you. I believe it's within 3 days of when you make your loan application. All right. So don't forget about that. Okay. And you'll see on there how much you're going to be getting from the down payment program and what you're going to need to bring in to closing, if anything at all. Um, Once you may not have to bring in anything really if you negotiate with your realtor for the seller to also give you a credit. Okay. All right. So till next time, everyone, and hope to hear from you guys very, very soon. Get out there and start getting your first piece of property under your belt. All right. Good luck.
Be strong.